Hi, I'm Kezia Samuel, Chief Market Strategist at AssetMark. As we close the book on 2025, the market's performance reveals a year of surprising resilience, but it also masked a profound shift in global dynamics. So let's dig in and look beyond the numbers in these next 5 charts to help us understand exactly what happened and, more importantly, the key takeaways for investors. First, 2025 was the year of the nearly everything rally. After a volatile start, 2025 ends the year with gains across nearly all major asset classes, with the exception of oil and Bitcoin. What's the key takeaway here for investors? 2025 served as a powerful reminder that emotional reactions or panic selling often hurts more than the volatile markets themselves. The second was that the Magnificent Seven had quite an impact. The sheer size of the Magnificent Seven can dictate the direction of the S&P 500. Over the past 3 years, the Magnificent Seven have been responsible for more than half of the S&P 500's gains. In 2025, despite their strength, only 2 of the 7 beat the S&P 500 as AI bubble concerns arose. What's the key takeaway here for investors? Concentration risk remains real. Mag 7 stocks make up nearly 35% of the S&P 500, and for investors, this is a reminder of the importance of diversifying beyond a handful of stocks. The third is that international stocks outperformed. For more than a decade, it was U.S. equities have been the place to invest. But in 2025, international markets outperformed U.S. by double digits as investors look beyond U.S. technology for growth opportunities. So what's the key takeaway here? It's that leadership shifts over time. 2025 serves as a reminder to ensure that portfolios are built to capture opportunity across region, sectors, as well as currency. The fourth is that bonds reclaim leadership over cash. After underperforming cash in the past 3 of 4 years, U.S. bonds gained more than 7% in 2025 and outperformed cash by roughly 3%, the widest margin since 2020. In fact, post-Fed rate cuts, cash, as you can see on this chart, now yields less than bonds. The key takeaway for investors is that as the Fed will continue to cut interest rates in 2026, investors holding excess cash can consider reallocating to other asset classes such as fixed income based on one's risk tolerance and needs. And the last is that metals shined while Bitcoin falls. In 2025, gold soared on renewed demand for safe haven investments, while silver and platinum goes parabolic on robust industrial demand from high technology build-out as well as supply deficits. On the other hand, you saw Bitcoin experience a significant decline despite supportive legislation. The key takeaway for investors is that Bitcoin is a volatile asset class and requires adequate risk considerations. Gold and other precious metals could be a valuable portfolio diversifier against inflation and geopolitical risks. That's a wrap-up on 2025. For our thoughts on what to expect from markets in 2026, check out our latest edition of Mark to Markets. Thanks for listening and Happy New Year.